Hi, and welcome to today's broadcast. Before we begin, there are a few pieces of information to go over. In order to receive CPE credit for this program, you'll need to document your participation. You will see letter codes appear in the form of a graphic on your screen several times throughout the course, and you will need to capture every code in order to be issued credit. As each letter code appears, write it down, then enter it in the appropriate code submission box and click Submit. Remember to click Submit one final time at the conclusion of the program as well. You will then be issued a certificate documenting your attendance and credits earned. If you have a question at any point during the broadcast, you may submit it in the questions box. We will try to answer your question as soon as possible. Should you run into any technical difficulties, submit your codes, then try refreshing the page. If your problems persist, please call us at 973-226-4494. This broadcast is being recorded and will be available on our website shortly after its conclusion. Enjoy!
Okay, just a reminder, I'm Darren Thomas. I'm the head of the leader of the State Tax Interest Group through June of 2020. So today we have Frank Agostino, but before we get to Frank, I just want to mention I'm setting up another CPE for May. I'm currently looking for a speaker, so.
Typically, the department, DOL subgroup, we get a speaker for that meeting.
As well?
Yeah, we can talk about it.
Okay, perfect. Yeah, we can do that. Absolutely. Perfect. Just before I introduce Frank, I want to acknowledge Ken Lang. Ken was a member of the group, and he unexpectedly died last month. And Ken was a great friend to me and to a lot of people in this group, and he's going to be sorely missed. Ken was a partner at Witham Smith & Brown, and like I said, he was a friend to me. He always had time to help me out with a work problem or any other type of problem I had. So, and I know he did a lot for everybody else too. So, I just wanted to make a mention of Ken before we get started. Today's speaker is Frank Agostino. Frank is the founder and president of Agostino Associates in Hackensack, New Jersey. Prior to entering private practice, Frank was an attorney with the IRS. He's also served as Special Assistant U.S. Attorney, where he prosecuted mainly criminal tax cases. And he also is an adjunct professor at Seton Hall Stillman School of Business, and also served as co-director of the Rutgers Federal Tax Law Clinic. So let's all welcome Frank.
Thank you very much.
Thank
you. Today's topic, you see that the title is Amnesty and Federal and State Information Sharing. But before we get to those topics, I've been asked to do the basics of New Jersey collection. How do we get to an amnesty? How do we get to federal sharing, and what should you do? You have to, before you get to the advanced, you should have an understanding of how New Jersey works, right? And that's a combination of what the statutes and the forms are, plus the interaction with Pioneer Recovery. Pioneer Recovery is now handling, at the early stages, most of the initial tax collection. Right? So all of us need to know when a case is with New Jersey, when it's with Pioneer, how do you move it back and forth? What do we do to assert our taxpayers' substantive and procedural rights? So you start with understanding how does the New Jersey system work, right? And who are the players, right? And I've also, the last set of players is the Attorney General's office. So you're going to have Pioneer, you're going to have Taxation, you're going to have the Attorney General's office, and then there are different parts of taxation that you need to know about. Right? So the cycles that we're going to go through is, first you have to have a liability. Then they have to bill you for the liability, right? So that's like your audit assessment. Then in billing is your notice and demand cycle. Then you have your determination letter, your demand letter, your COD, what we call your certificate of debt. It's equivalent of the judgment. Then once they have that, then they start enforced collection of your levy, your seizures, right, and your Attorney General referrals, or even worse. Right. So the first cycle you need to understand is the bill cycle. Right? The bill cycle is the initial notice that is sent to the taxpayer. Right? That, for the most part, it's based on either a return that was filed, an audit assessment, right? And that's, an audit assessment is an assessment after an examination. And then New Jersey has something called arbitrary assessments. If you don't file a return, later on, right, New Jersey will make a determination of a liability for you. Right? It's very important when you look at your notices to understand, am I dealing with an audit assessment? Am I dealing with an assessment that was on an originally filed return? Or am I dealing with a liability that resulted from the failure to file a return? Because your defense of these actions will vary based on what came before. Remember, these bills are all computer generated. New Jersey reminds us that their mainframe went online in 1982. They're still using, if you notice, the dot matrix printers. Many of you, very few of you, I'm sure, are still using your dot matrix printers.
Hey, it's a dinosaur, I love it.
But it works, right?
It's a piece of furniture.
The notice tells you, when they expect you to pay, and basically that's when the next letter is going to happen. And they're going to tell you what's happening if you don't contact them within that time. Right? Every one of the bills has the telephone number of an investigator. In New Jersey, there are two things you need to do in every case. Make a phone call and send a confirming communication, whether it be a fax or email. All right? Over time, you'll see that the file moves to different people. Institutional memory is changing because of, none of these people have gotten raises in 3 years. So it is our job to make sure that there is a file, because very frequently they have difficulty in putting together the whole case. It's not always bad, but it's enough that our job, telephone, call, speak, confirm. Right. Then there's the determine cycle, right? Now the determine cycle is you didn't respond. All right. Now it's going to go to a case investigator, but more likely than not, what's the important thing that happens once we get to the determine cycle? It goes to Pioneer Recovery. Right? That's your private debt collector. What is the most important consequence of a case going to Pioneer Recovery? 10.7% gets added to the tax. All right? So have those of you worked with the IRS debt collectors yet? Pioneer is also one of the IRS debt collectors. How does Pioneer get paid when they do federal debt collection? It comes out of the tax, right? So working with Pioneer federally means it doesn't cost your client more money. Working with Pioneer for the state of New Jersey means you have to factor into your representation of the taxpayer potentially an additional 10.7% of the original liability in the bill. Okay. What happens if you're able to reduce the bill?
Doesn't make a difference.
The Pioneer will contend to you that the reduction of the tax does not reduce the bill. So let's say they sent you $1 million notice and you convinced them that the tax wasn't $1 million, but that the tax was $100,000. What is Pioneer going to want as their fee? 107,000. All right. Again, we'll talk about how to get that reduced and what works there. Yeah, you got to ask. In everything in New Jersey, you have to ask. And one of the things, understand New Jersey procedure. There's a lot that isn't in writing. Right? Many of you deal with IRS practice and procedure as well as the New Jersey practice and procedure. And you will sometimes vent to New Jersey how much easier it is to work with the IRS because everything's in writing. There's a website, there's an IRM, everything is there. One, it's the worst thing you could ever say to people in New Jersey. all right? It's above their pay grade. You think they're the ones who are writing the manuals and the pay grades and the whole bit. Two, it is better to have nothing in writing. It just means that the tax professionals who do it over and over are able to talk about history and how it's been done in the past, and there's no one who is saying, but the checklist in the manual says we shouldn't do this. Right? The New Jersey will consider equity. New Jersey will consider the dollar amount of the check that you are bringing them. All right. So your question was, you've gotten those fees reduced, right? My recommendation is, it never hurts to ask, right? If you're doing something or proposing something that either is consistent with equity or consistent with the fisc, getting the government the money in the fastest way possible, propose it early, escalate if denied. All right. So the caseworker sends out the package, right? And this is what, I mean, in the materials, and anyone who needs the outlet, if they don't distribute it, you just email us, we'll send you the slides. These are what your package looks like. They're going to tell you, see, who to call, who to respond to, what they're looking at. So that's in your notification package, right? Then your schedule of liabilities is going to be attached. You're going to learn to read your schedule of liabilities. It's going to tell you your tax type, your return per period. Was it deficient, right, or delinquent? Delinquent, it means that that's the key to tell you that there was an arbitrary assessment, right? That when you see deficient, that's more likely that the liability was shown on the return. Delinquent means you didn't file the return. The IRS, not the IRS, State of New Jersey made an estimate. Now, the funny thing about these estimates is sometimes
They just pull them out of the air.
well, they always pull them out of the air, and they're making a guess. They call them arbitrary because they're supposed to be more than the correct tax.
Oh, way more.
Yeah.
Way more.
3 times.
Always?
Oh,
No.
yeah.
Okay.
Most of the time.
Right. What happens when they're less?
That doesn't mean that's what you owe.
Yeah.
They want the money.
So that's the thing, right? It's settling these cases, and I'm out of order. Delinquent versus arbitrary. There are times when you're going to want to just pay this at the earliest stage, right? Because this is what they requested, and then activity stops. No live body looks at it. On the other hand, if you wait later in the process, what are they going to ask you to do?
File the return.
Okay. Is filing the return always a good thing?
No.
So, even at this stage, delinquent versus deficient, that's a strategy call that you have to make. Can you file the return, right? There are times that they haven't been filed. Then the client comes to your office. And then you say to yourself, oh my God, do I really want to file this return? What will this return trigger? Paying this at an early stage, more often than not, if you pay early, you won't see another communication. And versus filing, then you say, well, wait a second, I filed this return. Where is the employment tax return? Where is the sales tax return? Where are the other returns that should be part of a package audit? So think about it before you take the next step in the collection process. License suppression. All right. Have you guys been dealing with New York? They've been suspending driver's licenses, right? 10,000 or more, they suspend your driver's license. The program has been fabulously successful in New York. I think they've collected, and I don't remember the exact number, but I think it's over $300 million from taxpayers who previously had said, they had no money. When you took away something that they wanted, they found the money. Then what's the latest craze in the federal arena?
Passports.
Passport revocation. How many have they taken?
Well, they sent 362,000 notices, they said, from State Department.
That's right.
Substantially a high tax liability, which is 51,000,
That's
50 index for inflation.
Seriously delinquent tax debt, 51,000. They have sent to the department systemically. What this systemically means, no human being touched it. Over 300,000. I have one of the cases pending in the tax court now because my taxpayer was the victim of identity theft. We've been trying to say, well, they don't owe the tax. But while we're fighting, they took the passport. But that's another example of a collateral consequence. There are 14 million cases in the IRS collection division. They estimate that more than 20% of those cases involve seriously delinquent tax debt. You know, tax debt that is, who's that?
The IRS.
Their IRS, they're calling.
Oh, I forgot the furlough.
That was a nice song.
There we go. Yes, this question.
I have a question about the passports. I have a client currently, they're in currently not collectible status. She never got any notice about her passport, but when I looked on the website, on her transcripts, there was a mention about a passport. I don't remember exactly what the wording was.
There's a code. It said certified to the State Department.
So what does that mean? Does that mean that she can't travel now? Because she never got any notification.
So, two things. Is there also a currently not collectible code on the account transcript?
Yeah.
Okay. If there is a currently not collectible code on the account transcript, give it about a month because the computer should automatically decertify that debt without you having to spend any real time on it. The things that you should worry about. One, if you didn't get the notice that was sent to the State Department, that suggests that the address that the IRS has for your taxpayer is different than her real address. Because when they certify the debt, when you saw that code on the account transcript, existing procedure is that the letter going to the State Department and the letter going to your taxpayer are sent on the same day. Second, CNC is what's called a discretionary ground for reversal of a certification. The IRS computers have been set to do that automatically. If it does not happen 4 weeks, 6 weeks in, then you should file a 911 with the Taxpayer Advocate's Office. The Taxpayer Advocate's Office has already issued about 800 taxpayer assistance orders in passport cases. All right.
So on the transcript, the passport reference will stay there and then something after it will appear?
You'll see a
as well?
reversal.
So maybe that's there then, because it was like
There
from
should-
last summer.
Okay.
The passport was from August.
You should download a new account transcript, right? You're not going to be able to call a tax practitioner.
No, I gave it and I sent it to the taxpayer because she wants to, she needs to update her green card. So I sent her all the transcripts for all the open years.
It should automatically correct itself. The IRS has said they're going to automatically correct if the codes are on, right? So, and again, this is off our topic, but the best practice for a tax practitioner is to order an account transcript. There are things that both the statute and the IRS have said will stopped the computer from certifying a seriously delinquent debt to the State Department. Those are filing an innocent spouse claim, being in an installment agreement, being currently not collectible, being in a collection due process proceeding, or having filed a claim for refund that eliminates the liability, all right, or a claim for a request for abatement. Those things should be reflected on an account transcript. If they are not reflected on the account transcript, which happens, not all revenue officers remember to input the CNC code or input the IA request code. What you do there is you find the correspondence or the proof that this was the status and attach it to the 911 and ask that it be input on the transcript of account before the passport, the debt is certified to the State Department, to avoid it ever being certified to the State Department. So you've done something proactively, right? The last thing you want is for your taxpayer to find out that their passport has been revoked, suspended when they're traveling, right? Because then you're in Europe, and what's going to happen? You're not going to be able to continue your travel. You're only going to be able to come back to the United States. Or when they want to renew their passport, and the passport file, the State Department file, stays open for 90 days. If you are frustrated sometimes with the lack of speed at the Internal Revenue Service, wait till you start dealing with the State Department. They are woefully understaffed, and getting the passport back is a much harder lift than protecting it in the first place. So best practice for those of you who do collection work, download the account transcripts. We have a program, we use a program called THS, right, that you can set the collection clients to automatically download your transcripts every time there is a new entry on any of your taxpayers' accounts. So you get to see it. In some cases, you will get to see it before the letter gets to the taxpayer. And if you do enough collection work, I'd say you invest in that program, because, again, once the passport is taken and getting it back is more of an ordeal, and you're going to have a very stressed taxpayer. Okay. Against the background of New York and New Jersey, the Division of Taxation also is looking at collateral consequences. All right. And those of you who do restaurants and liquor license cases, you'll see that they're looking at not providing the tax clearance certificate needed to renew licenses when there is a tax debt. Department of Motor Vehicles will not allow the renewal of some automobile registrations and truck registrations when there's tax due and owing. So, and New Jersey is playing with other licenses, right? They're seeing from the other states that are developing collateral consequences. Collateral consequences means that the traditional methods of collection aren't working, right? Because either the taxpayer doesn't have a bank account, or it doesn't have a bank account in his or her name, doesn't have a bank account in his or her name in the state that can be levied upon, so that they're using more creative ways of collecting the tax, right? When reading these notices now, you want to respond, because you don't want to put yourself in a position where then the license suppression will occur. And when I mean license, I'm not just talking about driver's licenses. New Jersey is expanding the number of licenses more and more. Okay. So the next letter after the determined cycle, the demand cycle. right? The demand cycle is, hey, this is getting serious now, folks. We've sent you 2 prior letters asking you to pay. We're going to need to get serious with you. Right? Now, the good thing about the demand cycle letter is it generally tells you your appeal rights, right? Your appeal to conference and appeals branch, which when I started practicing was a very swift and good place to resolve cases. How many of you have cases with conference and appeals today? Right. How long did you wait for your conference?
I have a corporate sales and use tax filing from late August of 2017.
Yeah.
Has not been heard yet.
Unfortunately, my experience is that it's taking almost a year.
I think mine was 9 months.
Right, to get a conference.
Well, you do it over the phone. It
With a
wasn't
conference,
bad.
not, okay, over the phone or go down in person. I always recommend go down in person. Over the phone, you don't, there is a lack of formality that doesn't always result in your cases being given the consideration that you want. I know it's a trip to Trenton, and I know it is, you know, time is money, and it's costing your clients. But if you look about success rate, when you go down there and you go down with the file and they have the file, you're able to do 2 things. One, right, really talk about the case, because the formality of you coming down, my experience has been, is there's more prep. 2, the formality of you coming down and being there avoids the man behind the curtain syndrome. All right, sometimes on the phone they said, look, I need to discuss this with my manager. I need to get approval. When you're there, you can sometimes say, well, let's invite the person in. Let's make this happen. And it does. So in an important case, and every taxpayer thinks theirs is the most important case. So I'm saying in a case where the taxpayer is willing to pay for the freight, I strongly recommend that if offered a face-to-face conference with New Jersey Conference and Appeals, you take the conference. So you have your appeal rights. Now, what's going to happen if you don't do anything?
Judgment.
The judgment, the certificate of debt. And that's what the demand letter tells you. So, again, what am I saying on all of these? You respond to every letter, because unlike other creditors, they don't have the New Jersey does not have to go to court in order to take the next step. And the next step, right, well, this is what the notice in demand looks like. And again, the notice in demand will attach a schedule of liabilities. You're going to look at the schedule of liabilities. You're going to decide if it's deficient or delinquent. You're going to decide whether to pay or file the return, right? That's filing the return to reduce the arbitrary assessment is generally effective to reduce the arbitrary assessment. Right? But you have to decide, is it more trouble than it's worth? Right? What else happens at this stage? Important. If it is a trust fund tax, especially sales and use, there will also be the responsible person case and the notice of finding of responsible person. Right? A lot of practitioners miss the fact that there are both of them will come together, right? And how do you know that they're different? The case number, right? So there'll be, the corporate case is going to be corporate case number 1 or 2, or if you've had problems before, and the RP case, which is responsible person case, that gets a different number. You have to respond to both. Why? Separate assessments, separate assets. A Another reason to respond to both is the RP does not get the ability to contest the entity's liability. So say you're a responsible person, but you want to say that the corporation didn't grab 100,000 in sales tax, they only grabbed 10,000 in sales tax. They didn't have to pay the sales tax. Can you do that at the RP case? No. So you got to fight the corporate case. Yes.
I think you can in amnesty,
Oh, in amnesty you could do anything. Right? And we're going to get to amnesty. Amnesty is let's make a deal. Cut me a check. No, and I don't mean it facetiously. It's, they're going to look at the facts and circumstances. It's going to be problem solving in amnesty. But amnesty is a far cry from the normal procedures. The procedures are very strict. If you don't meet your 90-day deadline, what happens? But what else? How do you contest the liability?
Court.
Can you go to court? What do you got to do before you go to court if you don't contest the liability within the 90 days? You got to pay it first. You got to pay it first and then ask for a refund. So that People's Express was the first of the cases, right? The court won't even look at, but this tax isn't owed. It's crazy. You had 90 days. If the notice was received and you sat on your rights for the 90 days, you're going to contest it by paying the tax. So these notices and the time frames that they give you in these notices are statutory and jurisdictional, which means the court can't help you if you blow the deadline. All right. Then you got your responsible person questionnaire, right? And the questions are all phrased in the nature of when did you stop beating your wife, right? So your response, and that's a different class when we talk about responding to the RP questionnaire, because sometimes you're going to reject the premise of the question and write your own response. All right. And then you got your notice, right? This is what your 90-day letter. If you did, the government's going to say, notice of finding a responsible person. What does that mean? It says that New Jersey has decided that you as an individual will be personally responsible for the taxes owed by the corporation. The important thing on these are, there are statutory trust fund taxes. You will get these notices occasionally for taxes that aren't statutory trust fund taxes. Yeah, they make mistakes. Oh, I know, and this is going to be a shocker to you. Occasionally the government makes a mistake. Get out. That's why we exist. To call them on their mistakes. So it is up to us. They've made a determination that our client is personally responsible. Your defenses to personal responsibility include, this is not a trust fund tax, and I am not a responsible person for that tax. Okay. So again, and when do you have to make those, when do you have to respond? What happens if you don't respond?
Then it's a...
You're done. What choices do you have to respond? Where can you go? The form will tell you where to go. The form will tell you, you have the right at this point to choose the forum. The forum you choose could be conference and appeals branch. The forum you choose could be tax court. Right? I'm not going to tell you that one is faster than the others these days. Both the DAG's office and Conference and Appeals are woefully understaffed. All right. Again, I think they told me at the last conference I had with Conference and Appeals, they said nobody in Conference and Appeals has received a raise in 3 years, and they have not replaced any of the people that have retired. So I think we may be, we're way down in the number of conferees hearing cases. The tax court, we have more judges. That's a good thing.
I have a question about it. Since they were overwhelmed, do they ever just, for smaller stuff, just kind of let it slide and dump it? Or do they always, they will eventually get to you?
Okay. How many of you have gotten notices from New Jersey that you say are more than 10 years old?
Yeah, we always get that once in a while.
Okay. So you've answered your question. Why did it take 10 years for you to get that notice? Theoretically, they will eventually get to everything. All right. I've gotten notices. I think my taxpayer gotten a notice from 1998 that he didn't make a payment.
Sometimes it's crazy.
Right. Right. Sometimes it's crazy. And then you have to say, well, how am I going to prove that a payment was made in 1998 if all of the records no longer exist? So my answer to your question is, until and unless you have a document showing that a case and a matter that's been opened up from some of these earlier letters has been resolved, you should infer that the state will eventually get to you. Yes?
We routinely don't get that letter, especially when I deal with Pioneer. I call Pioneer, they say it's resolved, and then they kind of move on to the next case, and I never get the letter saying it's resolved.
Mm-hmm.
Because the person is no longer there.
Well, no, there's other reasons. That's what I said, right? We started this by saying you talk to them on the phone, and what do you need to do? You need to send them the letter, right? And send it to, we send it to Pioneers, we send it to the state, to make sure that we have a record of the resolution of the case. Right? We're a law firm, so we have to keep records in a certain way and for a certain period of time.
Well, oftentimes we send them a check,
Okay.
and they accept the check and they close the case. To me, that's kind of enough.
Okay.
But sometimes they come back.
Right.
Yeah, it's like, why did they close the case if it wasn't resolved? And it's,
Who's got the burden of proof?
we do.
Okay. You've answered your question, right? The definition of insanity is doing the same thing over and over again and expecting a different result.
So what's the resolution if they don't send us a letter? Because I've asked 3 or 4 times to not get it.
You send a letter.
Resend the letter.
You send a letter. Look, if it's a lot of money, you send in a 911 asking for a letter, right? But in the normal course, we're going to send a confirming letter saying that the case has been resolved. It was resolved by this check. Kindly stamp a copy of this letter received and returned to us in the enclosed self-addressed envelope. And those letters that have come back in the self-addressed stamped envelopes have allowed us to settle some cases when mistakes were made. Right? Is it a perfect answer? I don't think it's a perfect answer, but it's worked. Right. So again, your choice is to go to protest and appeals. Your choice is to go to tax court. Tax court, now you've got a court record resolving the case and closing the case. Right? Tax court, it's more expensive for non-attorneys to do. So those are the things that you look at. Going to conference appeals does not deprive you of the opportunity to go to tax court. This is not an either or, right? You can go to conference and appeals, and then if that is unsuccessful, go to tax court. That means it's going to be a very long process. And I find that the good thing about tax court is, the tax court people are still going to consult with and work with their clients, sometimes they'll work with people in appeals, you're going to get to the same way, and I think faster, because the pressure of a court date focuses everyone in the process, right? It focuses the DAG, it focuses the DAG's client, it focuses the taxpayer, and the cases get resolved more expeditiously. On the other hand, there is a cost that comes with that. They're going to, for lack of a better term, sometimes the DAGs want to redo the audit, right? They'll ask you for all of the same documents that you turned over during the original examination to look at your contest to the assessment. I don't find that to be that troublesome because we already have a file, right? It's just reproducing what you've already turned over. So think about what is the right answer for your client, especially when you talk to your other taxpayer, your friends in this business. There are some issues that Conference and Appeals is very reluctant to settle, and you're going to do a better job settling it with the DAGs. All right, and you got to know those issues, right? Because like in restaurant cases, right, we all know that there are parameters of mark-ons. There are times you feel like the conferee that you got isn't giving you the mark-on or the liquor mark-on that you've gotten from other conferees. But when you get to closer to trial and you go to the tax court, I mean, they're not going to, it is less likely that someone's going to negotiate with you for an extra 0.2 or 0.3 on a is it 2.5 or is it 2.7, right? I think you get to the bottom line quicker when you're with a DAG and there is a tax court judge saying, how do we make this disappear, right? It's harder for the division to say to a tax court judge, this case that we just had before you, we settled at 2.4, and the restaurant that is less than a half a mile away with the same clientele should be at 2.9, right? Same market, same mark-on, same menus, same vendors. So again, you need to know your case to decide which procedure to use. All right. And again, you're going to look at your notice of filing a responsible person status, deficient recovery fee. It's tough to get to negotiate the recovery fee once you get to court, but everything's negotiable. Notice and demand for payment, collection procedures. These are the forms. Yes?
The recovery fee. I've had cases with Pioneer where they just gave back the recovery fee.
Sure.
What are the parameters for that decision?
Okay. I'm told that the first time they can wipe out the fee in total. So if your client if your client's not a recidivist, it's not a big give to wipe out the full recovery fee. If this is your client's second case, the rule of thumb is to split the fee. Third case, it's going to be like pulling teeth to get them to wipe away the recovery fee.
Thank you.
That's just like with penalties.
Yeah. Again, you got to ask. A lot of people won't ask.
Don't ask, don't get.
Don't ask, don't get. Well, that's why they're hiring you. If the taxpayers could just do it on their own, why are we here?
They wouldn't do it anyway.
What?
I said they wouldn't do it anyway.
That's why they hire you to do it. We fight their battles, right? By hiring us, their problem now becomes our problem. Their stress becomes our stress. We can only do it wrong, right? Yeah. It's not that often. I mean, it does happen. Well, how often does a client thank you for having to just pay the right amount of tax?
And I have to pay you for this?
That's part of what we do for a living, right? I mean, we try to get them down to the right amount of tax. We try to, save them from themselves, the things they did. And it's our job to ask on their behalf, to fight their battles. All right. Now, if you didn't respond, you didn't go to tax court, you didn't go to conference and appeals, what happens? They enter the COD, okay? Now, right, unlike a private creditor, we got a dispute. They got to file the lawsuit first and then win before they file a judgment. The state of New Jersey, all they have to do is push a button. The CODs are electronically filed. All right? Now, what is the COD the equivalent of? It's the equivalent of a lien on the taxpayer's real and personal property in the state of New Jersey. All right. So when a lender looks at it, whose lien is going to come first? First in time, first in right. If the COD is there, that means it's no different as if the state had a mortgage on the taxpayer's property. That comes first. So you're probably not going to get another loan on that property, an equity loan on that property, without first arranging to pay the COD. Okay. And this is what they look like, right? Looks like a case. Take notice that this has been filed, and it is a certificate of debt on all the property and real property in New Jersey. And why did this happen most times? Because taxpayers don't want to open their mail, and they think that what they don't open doesn't hurt them. Yes?
Uncomplicated question. In New Jersey, it's 20 years as opposed to the IRS, which is 10.
Yeah.
But the IRS virtually never renews it, but New Jersey does.
Yeah.
Can you explain why?
Yeah, I mean, why?
Federal government prints money, Jersey has to collect.
No, it's not. Or one, its resources, federal policy, the Congress, the whole bit. If you haven't collected in 10 years, most statistical surveys will tell you that you're not going to collect, right? The GAO did a study that said after a tax debt is more than 3 years old, the collectability of that debt drops to 17 cents on the dollar.
Right.
Okay?
Like our fees.
Right, like your fee. The longer you wait, the less likely you're going to be paid in full. Right? So tax debt
Still better than zero.
tends to be down to 17 cents on the dollar. So at the 10-year point, if the fact that there's been a lien on the assets and the computer has been monitoring the taxpayer's income to see if it comes out of the queue, right? The IRS has a computer program that looks at the taxpayer's income versus the debt and pushes it out of the queue to the field when the taxpayer reports income above a certain amount, the queue amount. So they've got procedures in place and algorithms in place that are best practices for collection, scalable to the people that they have. So, there came a point where it was 6, they went to Congress and said, really what we need is 10. And then for debts above 150,000 generally, I mean, there's no magic hard and fast number. But when the computer tells them that, hey, a little bit more time, this debt would be collected, they can reduce the assessment to judgment and get more than the 10 years, right? And there's a couple of those cases every year in New Jersey, and a lot of those cases in New York, all right? So where they reduce the assessment to judgment. The New Jersey, on the other hand, right, they have 20 years, and they can get another 20 years. So they're really thinking about 40 years.
It's almost your whole life.
Yeah, okay, so here's the fact. New Jersey, we have a lot of homeowners. Right? So if you look at it today, we got a debt, and you file a certificate of debt, and you look at the equity that you have in the house today, there's not going to be a lot of debt. I mean, a lot of equity there for the state of New Jersey. On the other hand, debtors do a lot to save their houses, right? How many people do you have that they're in a house, they may even be underwater, they have a certificate of debt, New Jersey's not doing anything, but they make their mortgage payment every month. Right? At the end of that 20 years, or at the end of that 40 years, is there going to be equity in that house?
Yeah.
Yeah. So that's why we wait in New Jersey. Right? There's a lot of homeowners, right? High percentage of homeowners. A lot of those homeowners are going to continue paying their mortgage debt, notwithstanding the fact that there is a certificate of debt on the property. So when New Jersey thinks about it, we'll talk about New Jersey offer and compromise practice later, but when the feds do an offer and compromise, they value the equity on the date that you file the offer and compromise. New Jersey is valuing your equity in the property at the expiration of their lien. So that's why you're frustrated in the difference in the calculation of reasonable collection potential when you're doing a federal offer versus a state offer. Different in mindset, right? That's why, I mean, the two things that very different from the federal, we'll move to the next, is you look at the liens and value the equity in New Jersey at the end of the lien. So if the taxpayer is paying the debt off, that means every payment is increasing the value of the certificate of debt. Two, the state of New Jersey thinks that all closely held businesses will eventually go public and you will become millionaires. Right? Tom McDonald will tell you the story about that happened, right? There was a case where they resolved it, and then 4, 5, 6 years later the company went public, and he felt like, you know, New Jersey got screwed. Because they compromised the tax debt that had they waited would have been paid in full. Right? So it's a different mindset of tax collection. It's above my pay grade to say what's right, what's wrong, what do we want our public servants to do to collect tax debt. Right? But it's a different way of negotiating. And in order to negotiate and to get to a win-win and to a yes, you always have to know the rules of the game and not ask another actor to violate his or her rules. Okay. So now, once you've got your COD, what can New Jersey do? They can levy, right? That means have a warrant of execution served. And what do warrants of execution reach in New Jersey? Right? Your bank accounts, your brokerage accounts, your tenant's rent, all of your notes receivable, cash value and your insurance, auction proceeds, safe deposit contact, right? You've got these old cases where they used to come and say, open your safe deposit box. Your businesses, right? How many of you have had restaurants that have been closed down by the state of New Jersey on the seizures?
No.
Jewelry stores on February 12th. Right? There were certain days that you know are going to be pressure days. And any other, intangible asset. All right. And what's a warrant of execution look like? Again, it's just a letter that is served on your creditors, the taxpayers, people who owe money to the taxpayer, the debtors. Will get this, they'll tell you how much you owe, and then you think your taxpayer is ever going to get paid by their debtor? Once you get that letter? Nope. All right. Then, if the letter doesn't work, right, they can actually go after the businesses that are still operating. Now, this is the real benefit or detriment of Pioneer credit. Right? With the increased use of Pioneer, the revenue officers, the investigators that are directly employed by New Jersey are no longer focusing on the debts that go to Pioneer. Now, which of the debts go to Pioneer? 100% of the debts after the determined cycle, right? So you have a short period of time to settle with New Jersey, not to have the 10.7. Then you have a longer period of time to settle with Pioneer through the certificate of debt cycle. Then if all of that hasn't worked, then the people that are left as revenue officers, they're focusing their time on seizures. Right? And they're doing seizures and closures, right? So the people that are left are not looking at the low income cases or the low hanging fruit, right? That's just costing you guys and all of us taxpayers 10.7% for non-compliance. And the ones that don't want to comply at that point, then the agents are being taught and specializing in seizures, right? And the seizures are businesses, assets, equipment, licenses that can be auctioned or sold. And that's the way the system is supposed to work, right? The system, so the low-hanging fruit, the easier to collect money, private debt collectors, if they don't perform, they're easily fired. And the people who work for the state of New Jersey focus on the high-impact collections. Because high-impact collection have two focuses. One is collecting money. But two, every time New Jersey seizes a restaurant or a business, similarly situated restaurant holders try to get themselves into compliance. It is more effective from a voluntary compliance point of view to seize a business than it is to put the owner of the business in jail. Okay. So what happens if all of that doesn't work? The case then goes to the Attorney General's office, right? After you've done everything, all right? And it's not supposed to go to the Attorney General until they've really given it the old college try to work with you and get the case paid or resolved or settled. Then the case goes to the Attorney General's office. And the Attorney General's office has a broad discretion of what they can do with a case at that point, right? And it could come to wage garnishments, right? And that's very frequently. They'll do wage garnishments, foreclosure actions, and in rare instances, they bring criminal cases. So
for a while, they were going after sales tax scofflaws for criminal, if it was like some really big numbers.
Don retired.
No.
New Jersey, for a while, had something called the New Jersey Top Debtors List. And they do still have the Top Debtors List. The Top Debtors List collects a lot of money by shame. But there is still some shame out there.
There's a lot of shameless also.
Okay, so for the shameless, there was a group in the Criminal Investigation Division that would send you a letter. Tell us why tell us why you shouldn't be prosecuted for evasion of payment. Right? And like one guy they went after, he had a private plane. Oh, I didn't pay my tax because I really was so afraid of flying commercial. Those lines at TSA are just uncivilized.
And they get longer.
So for a while, New Jersey was actively pursuing, and they were making some good money on the top debtors list, criminal prosecutions for evasion of payment. They've relaxed that. Again, so right now, it's a more reasoned approach. They evaluate the impact, they evaluate the equities, and they reserve the criminal prosecution for tax cases on the more willful, impactful cases. You'll see a lot of them lately have been cigarette tax cases, motor fuel tax cases, right? The cases where the dollar amounts add up very quickly from the failure to withhold and pay over a liability. Well, and the feds have been doing more employment tax cases, failure to withhold or failure to misclassify or wrongfully misclassifying taxpayers. Yes?
If you're going to get to this later, just go ahead and do it later. But you've been talking about negotiating. At one point you mentioned New Jersey offering compromise. But we've been told repeatedly that New Jersey does not have an offer and compromise process.
Okay.
So I'm sure there's a way to do it, but that's what I'm asking. What is the way to do it?
Okay. Is the statute still on the books?
Yeah.
Yeah. So you can't say that there isn't a process if New Jersey's offer and compromise statutes haven't been repealed. Right? New Jersey has a number of different ways to resolve disputes. Okay. The most prevalent used is the Form 906 process. Right? And the Form 906 process allows you to resolve debts on statutory criteria. And there are statutes that deal with the offer for liability and collectability using the 906. The 906 is the closing agreement in New Jersey. Right? So it's the same number as the feds, right? In the federal government, they use the 906 can be used to settle any tax matter. The New Jersey 906 isn't as broad in the statute, pretty broad. All right? With a little imagination, every case can be settled using the 906 process, which is the preferred process by the Division of Taxation. In some rare occasions, you've got a settlement that fits in New Jersey's offer and compromise statute, which is, the offer, doubt is the liability, doubt is the collectability. The problem that you are facing is that there's nobody in New Jersey who's been assigned to process the offer and compromise. Right? So the statute's on the books, the procedures are on the books, but New Jersey hasn't allocated people to do it. So what do we say? We are tax professionals. Right? There's a statute on the books that says we can't deduct something, like state and local taxes. We don't like it. Well, we don't have money, right? If we can't deduct our state and local taxes, we'd have to pay more tax. That would be bad. So let's just write that statute off the books and deduct everything we want. Can we do that?
No.
Why?
Before the software wouldn't let you.
Oh, so the software determines the tax now. What, you mean if I can change the software, I could, have any deductions I want? Now I'm going into the TurboTax business. It's the law doesn't let you, all right? Now, do the same laws apply to us and the government? Yes, it does, right? The system only works if all of us buy into the fact that there's rules, that Congress makes the rules, and that the tax professionals who are directly employed by the government and employed by the taxpayers follow the rules that are created by Congress. So there's a set of rules. in the statute that the executive branch of the government isn't following. Now, those of you who have followed presidential disputes over the last 2 years would know what happens when the executive branch does something that the public doesn't like.
Nothing.
Oh, it goes to court.
We go to court. We go, that's why we have another branch of government called the court. I have, and the government, the New Jersey will tell you this, that I have on a few occasions now sued them for failure to process offers in compromise. And every one of those cases has resolved by us coming to an agreement. Whether we put it into a 906 and we had some creative discussions, we got to yes, right? Maybe we have to split the wall in half, but we're gonna get to yes. And you just have to push the negotiation. And sometimes it's a lawsuit to say, we filed an offer in compromise. The statute says you have to consider it. Statute doesn't say you have to take my offer, but the statute says you have to consider it and not be arbitrary or capricious in rejecting it.
So next time they tell us there's no process, I'll say Frank DeAgostino says there is.
Oh, I'll send you the statutes.
Okay.
I've written an outline on the process. You want another newsletter article on it?
Like I said, this is the dilemma. I knew that there were alternative procedures. The phrase Form 906 is helpful, but it never made sense. And so you just put sense.
I think I've written a newsletter article on the offer and compromise process in New Jersey. So if you get my newsletters, or if you look at the old newsletters, you can find the old ones on, how do you process an offer and compromise in New Jersey. All right. But again, you talk to the people. So it's a frustrating discussion. You're going to escalate up. But nobody in New Jersey wants to walk away from a real check of money that they're not getting, right? There are rules, right? You can't go to New Jersey and say, hey, I got no equity in my house. Because they say, but my certificate of debt is good for 40 years. In 40 years, you're going to be in that house, and you're going to have paid down the mortgage.
Or your children.
Or your children. So you have to sell it. And it is, the ones that work most frequently is where the taxpayer really has nothing, and there's a parent or another family member that is coming up with money that the government would never get their hands on, right? The kid isn't going to inherit the money. Other offers in compromise that have been very successful are when the taxpayer is no longer in New Jersey and has no desire to ever come back to the state of New Jersey, whether they're living in a foreign country or living in the Southwest United States. So you've got to demonstrate in your offer and compromise why this is in the best interest of the government, that what you are proposing is a win-win, but that win-win will get you there. Pioneer. All right, so 100% of the cases after a certain point of time are going to go to Pioneer. So we all have to learn how to deal with Pioneer, how to not deal with Pioneer. And again, it's not a right or wrong thing. It's the rules of the game thing. We need to do this. Right? So Pioneer is a private collection agency. Right? They are not the government. They are contracted by the government. They bid on RFPs. Notwithstanding the fact that they are not with the government, they have to apply all of the government's ethics, guidelines, procedures, laws, interaction. The most important being the privacy laws. Right? They have to respect the privacy laws. All right. So how is a Pioneer case going to work? Once a case goes to Pioneer, Pioneer will send you a letter and a revised schedule of liabilities. All right. if they get the case, so what you're supposed to do is call them up right away. Try to resolve the schedule of liabilities. This is wrong, this is right. What are we talking about? If we can't get it done within that 30 days, and that 30 days, there's a lot that can be done, right? Pioneer can get rid of penalties. Pioneer, well, under the contract with the state of New Jersey, Pioneer can get rid of penalties. Under the federal contract, when you're dealing with Pioneer as a private debt collector for the IRS, it's not as easy. Okay. But when working with the state of New Jersey, to get to yes, you will find it pretty easy to get penalty abatements from Pioneer. If the case is not resolved in 30 days, Pioneer sends you your notice and demand, and that's going to give you another 30 days to respond to resolve the delinquency. 90 days when you haven't filed the returns, right? Now, what Pioneer is authorized to do with you is always on their website, all right? So this is also a trust but verify situation. Before you call Pioneer, you go to the website and look at the deals they're currently authorized to cut. Because right now they can give you an installment agreement between 3 and 36 months. But some of you are going to have experience with people on the phone and saying, I can only give you a year. Or I can only give you 2 years. And then you cite them to the website and say, you can give me 3 years. All right? If your deal is that you're going to pay them in 12 months or less, they don't have to file the certificate of debt. Now, one of the ways, like, then you're going to have the issue with them is, right, what is the payment within the 12 months? What if I'm offering you $100 a month, $100 a month, $100 a month, and then on the 12th month it balloons and I'm paying you in full? Can we do that? All right. Be creative in what is the 12 months. Right? If the certificate of debt and the credit rating is important to you. And keep pushing. And they're going to tell you that they have to file the certificate of debt if it's more than $2,500 and the terms are more than 12 months. Again, these are aspirational, not statutory rules. So you figure out how do we work within the rules, but get what our clients need. All right. Then, if you can't resolve it with Pioneer, right, and that includes while you're with Pioneer and you're not getting to yes, you should always be asking, well, I want to go to talk to somebody at the state, or I want to file my 911 with the state, right? Because otherwise they will file the certificate of debt.
Also,
Yes.
when you're dealing with Pioneer, there's always a person from the state there
Available.
that you can escalate it up to.
2 things. Whenever you're dealing with Pioneer, every single phone call is recorded. So the recording of every phone call facilitates escalating all the way up in New Jersey. Escalation is done for 2 different reasons. One, when you think the person who's on the phone has done something wrong. And knowing that they're taping and knowing that you can escalate is power, because the Pioneer people don't get the benefit of New Jersey that is state employment laws, like the being an employee of the state government. So when Pioneer finds that one of their representatives has done something wrong or made a mistake, what can happen to that employee? They can be fired.
They lose their minimum wage job.
But
They lose their job.
Are they
Minimum wage.
unionized
They're
like
up
the
to
state
85.
employees?
Excuse me?
Are they unionized like the state employees?
No, not yet.
Oh, so they don't have,
No, they go from there to McDonald's.
Not all of them know them. Some of these people are good. And again, how do you defeat your enemy?
By being their friend.
You make them your friend.
Kill them with kindness.
Don't, again, you can get a lot from the people at Pioneer. They can abate all your penalties. They could work with you on the redesignation of payments. They could recommend your settlement up the chain of command as long as you're writing your settlement in the right way. Okay? So work with the people at Pioneer. And then again, what happens, and we went through the cycle, if it's not resolved with Pioneer, and a lot of the cases are, I think they say that the number of cases that are resolving with Pioneer, with installment agreements, with penalty abatements, is a big number, with the filing of amended returns to reduce the tax, right? That, in terms of settlement, right, one of the things you could do is, hey, your number, your delinquency number is too high. Can you process an amended return for me? All right. Then you've negotiated the tax down to something you could work with. All right. Be creative. Talk to the people at Pioneer. How do we get to yes before the certificate of debt is filed? What happens after the certificate of debt is filed? It goes back to New Jersey. Right? Why is that? Right? And that's what we said. Now, the New Jersey people are supposed to be the specialists. And if they've explored everything with Pioneer, then we're supposed to be talking seizure. Certificate of debt, it's a perfected lien the minute it's filed, right? It is a certificate of debt filed before a notice of federal tax lien has priority over a notice of federal tax lien. All right. 20-year statute of limitations on a liability. 20 years can be extended to 40 years. Now, not all hope is lost on the certificate of debt, right? You can go to court. Sometimes you will argue that the underlying documents were not sent to the taxpayer's last known address. And then the government has to produce the documents. The tax court will ask the government to produce the documents that are the condition proceeding to the assessment of the tax. What happens if the government destroyed the documents or can't find the documents? They wipe out the debt. Tax court will wipe out the debt because the government can't prove their entitlement to the judgment. So although this is a very long period of time, you weigh that long period of time against the government's document retention protocols. Welcome to my life. So, again, not all is lost because they have this extra long statute of limitations. Because they don't always keep the documents necessary when they go to court to prove that 20 years ago they did everything they should do in order to perfect the original debt.
So that sometimes you can challenge it and knock them out.
That's what happens.
Well,
And I have a couple of reported cases where trust fund recovery penalty cases, the IRS sales state tax cases where they weren't. They were not able to prove that the notices were mailed or actually received by the taxpayer. One of my cases, the notice says it was sent on a certain date, and that my taxpayer must have received it because the mail didn't come back. And we put on testimony that how could he have been there that day? It was a Jewish holiday. He's always closed on that day. There was nobody to pick it up. And we won that case, right? So sometimes it's, unlike in the IRS cases, all the IRS has to show is that they mailed it. New Jersey has to show that you received it. Usually the proof of receipt is the green card, right? More and more, you're asking for signature authority on the green card, right? I've gotten handwriting experts to say, wait a second, it wasn't my client who signed for this mail. Government, did you give my mail to somebody else? Let's call the postman. Does he remember who he gave this important document to? We've had those trials. So it depends on the amount of money involved, depends on the age. We're tax lawyers or tax professionals. Think like tax professionals. Norm was used to arguing, right? Just be Norm.
You know, one thing that I know I've had frustration with Pioneer is you fax them the power of attorney.
Mhm.
All right, you call them up. I never received it. Okay, great. I'll fax it again. Never received it. Can you email it to me? It's that they have one email address, the Navient email address, and the fax, and then, you know, after 10 times, you get frustrated saying that it's, I've sent it to you. What else do you want me to do? And then, you know, by that time, unfortunately, you know, that person's no longer handling the case. Someone else is. Well, I don't have the file. Thank you.
Again, you just push. You have e-fax. You
Yeah.
just set it to keep sending it till they tell you they don't have, they have it. I mean, again, you can't get frustrated.
You have it 40 times already. Stop.
Okay, getting frustrated means you've lost. All right? So our job is not to lose. Our job is how do we get to the win-win? Just, we've got computers, we have e-fax, just send it to them till we have a transmittal saying they picked it up. And I mean, all of these little problems can be solved with us just applying common sense, right? All of these little problems are just little roadblocks to get to the real question. How do we resolve this case? What's our win-win? State of New Jersey needs money. Our client needs this resolved. What can we do to give everybody what they want? Yes, ma'am.
Will Pioneer speak with you if you conference in your client? Say you're having trouble getting the power of attorney set. Can you conference in your client and have the client say, speak to you?
I've never had that work.
Because I know you can do that with the IRS.
Yeah, that's, I've never had that work. I mean, Pioneer does work with you, with your client. You know, they aspirationally.
If the client's sitting with you, they will. But
Yeah.
if you try a three-way, they won't.
Yeah, they are stuck with the same privacy concerns that the government is, right? And identity theft is a real problem in New Jersey. I think after Florida, we're one of the highest states for identity theft. Now, you know, Pioneer aspirationally wants to give you the same representative throughout the engagement. I mean, that's what their official aspirational guidance to all of us is. Right? But like any organization, they have some turnover. They can't guarantee you're always going to get the same people. All right? Will they meet with you to discuss your case the same way New Jersey does? No. Right? No.
You're not going to Morristown.
Yeah. Yeah.
Is it Morristown or Morristown?
Morristown.
Morristown. So
God,
no,
Cherry
you
Hill.
cannot meet
great
with
ride.
anybody at Pioneer. They
Probably getting a cheesesteak.
only do it on the phone. All right? They can Pioneer do an offer and compromise for you? No. All right. What New Jersey has said though is that Pioneer will forward all offers. So just because New Pioneer cannot do an offer and compromise for you doesn't mean you shouldn't make the offer. Everything is forwarded to New Jersey. New Jersey, the adults at New Jersey want to hear about and discuss every offer. And then you just get into tough negotiation, right? You don't leave until you get to yes. there are some people there who are the masters of frustration, right? They get you frustrated, and you feel like you have to leave and stop negotiating. And I never stop negotiating. And more often than not, we get to yes. Sometimes there's a break in the negotiation while I sue them. But
He sues him with the left hand and negotiates right hand. Must have two different phones going.
well, you just want to get to
Probably
yes.
good to watch during the day.
So instead of bad cop, good cop, he's both at the same
Not
time.
But they can't figure out which is which.
No, there's a law in the books. Well, I am for compliance with the law, right? If there are compromise statutes on the books, that means the legislature has decided that compromise is sometimes in the best interest of the government, that rejecting all compromise is by definition arbitrary and capricious. So our job is to get to that gap between, what is in the best interest of both the taxpayer and the government, and that the denial of the offer would be arbitrary and capricious, so that the court would say, guys, you got to look at this. We all are in this state together. We're all in this together. We want to reduce the deficit and collect our taxes. And always remember, taxpayers are unwilling customers. They have no obligation to say, and no ability really, other than moving, to say, I don't want to deal with you. So they've got, the state needs to look at taxpayers as annuities, as customers, and they have to follow the rules to want them to stay and continue to comply. Yes?
We've got about 30 minutes left.
Okay.
Well,
I'll keep us started moving soon. Can they adjust the referral fee? Yes. Again, there were rules about it. The advice, again, they say, talk to them. Try to get them out of their comfort zone. Try to get them to talk to their supervisors or the state person. Don't yell. Try to get to yes. How are you going to get them to yes? Yes.
I've never had a problem dealing with any of them. They're always decent.
They're all, look, it's not a choice, right? So yeah, they're always going to be decent. Know the rules. Know what's reasonable. We can't tell our clients, hey, you're all on tax holiday. We have to, sometimes we deliver the bad news. Sometimes we deliver the bad news to the state. The client doesn't have the money to pay. You can't take blood from a stone. How do we get to something where everybody survives? I've gone through okay. So, enforced collection, when they take your wages, how much of the wages can they take? Once we're out of Pioneer, now we went through this process. What can New Jersey really take from them? Yeah, they can 90% of the wages, unless the income exceeds 250% of the guidelines, then it's 25%, right? So really, most cases we're talking about, they can take 25% of the wages. They could take, well, it's the other way around. The government can take 25% of the wages. 75% of the wages are going to be exempt. Unless you're below the poverty line, 250% of the poverty line, then 90% of the wages are exempt. They can't take your clothes. Household goods and furnishing, again, the value there is $1,000. It's rare that they're coming in and trying to sell your furniture. Furniture and fixtures of business is different, but your household stuff, they're not selling. You're not seeing New Jersey doing home auctions anymore. They can't take your cemetery plot. They can't take your workers' comp award. Partnerships and partnership interests, that's just complicated, right? Because they can't become a partner. They can't say, okay, now all of a sudden I'm your partner in the business. Your partner didn't pay his taxes. They can't substitute and become a partner in a business. They can't take your Social Security.
But the IRS, yeah.
The IRS can. That's the difference between the state of New Jersey and the IRS. The anti-alienation clause
In the Constitution.
that applies to pension plans doesn't apply to the IRS, but it does apply to the states. So the states can't take your Social Security. That's a federal minimum payment to you. The states can't take your IRAs. The states can't take your 401ks and your 403bs, right? And that is different from the Internal Revenue Service. Okay? You can get any of the levies released if you demonstrate financial hardship, right? And that means, what's financial hardship for the state of New Jersey? That you can't pay your rent, you can't pay your basic living expenses, you can't pay your groceries, you can't pay your medical expenses or your co-pays. You can't pay a pay-to-stay payment, right? Alimony, child support, that if you didn't pay it would result in your incarceration. There's lots of reasons to request a release of a levy or a wage garnishment. You can go to court, you can go to Court in Trenton and get a hearing on whether or not the levy is appropriate. Unlike the IRS, right, where you got your CDP, after they don't do the levies until after your CDP. This is, they go to court to do the garnishments, and then you can go to court to fight it. All right. Back to the settlements, the Form 906 are the closing agreements. In New Jersey, you can settle the cases. Again, there's a statute, and in offers and compromise in New Jersey, where there's doubt as to the ability to pay. All right. New Jersey also has a taxpayer advocate. People who deal with the taxpayer advocate in federal and state find that the people and the advocate you get all have different styles. The New Jersey advocates are more like putting you in touch with the right person in management to deal with your problem. You are not, if you are right now, if you're dealing with the New Jersey Taxpayer Advocate's Office, you're not going to get an advocate who's going to go in gangbusters the way Anina Olson is and say, New Jersey, you can't do this.
They're part of the same, where Nina's a separate department, they're part of the same.
Yeah. A part of it's personnel too. I mean, whoever is the taxpayer advocate,
You mean the national?
or even the local ones, right? They are the soul of the department. They tell you how hard to push or not push. Am I going to be an advocate who takes no prisoners, or am I going to be an advocate who looks to be a mediator? Both have merit. The styles are different. So right now, the style is more mediation, more put you in touch with the people that can help you get to yes. But it is you, tax professionals' job, that have to get through the door. We're going to open the door for you. We're going to introduce you to the right people, but you have to make the arguments for your taxpayer.
Right.
Whereas, in federal, right now, with the taxpayer advocate that we have, the advocate is kind of like your co-counsel in the case. You give them the ammunition, and they're going to work with you to get to yes. So it's just a different style. But you want to, again, like any advocacy, you want to invest them in the correctness of your position, right? Because there are these conversations that we're not part of. And you want them to like your client and find for your client and understand your client's challenges to get you there, right? So if it's a widow, if it's someone with children, if it's someone with a copay, someone who's lost their health insurance, right? Tell the there but for the grace of God go I story. And that is what is going to help, right? Tax people, hate the scenic route, right? Very frequently, tax people say, look, it's just about the numbers. I don't want to talk about anything about the numbers. I'm not there to tell a story. But The taxpayer advocate is there to help you when there's a threat of hardship. That's always a story. So you end up having to learn a little bit more about your clients than you want to know. But you have to know it in order to tell their story, to explain their challenges, and why the government shouldn't collect from them, but they should collect from everybody else in the state of New Jersey. No, but that's the reluctance, right? The reluctance is, right, someone working for the government is supposed to be skeptical, because nobody really wants to pay. So you're asking the person to intercede, to do something that sets your client apart from everybody else who's expected to file and pay on time. And that's why you're going to say, you know, advocate, I need help. This is a unique situation. This person will face hardship. And the first rule of government is to do no harm. So, what cases can they help you with? If something's taken more than 75 days to resolve, you go to the taxpayer advocate and say, hey, can we push through this logjam? Right? When am I getting my refund? My client needs that refund. Why is it taking so long? Or anything else that you could say is going to be an undue hardship. All right? And one of the things that the feds have started recognizing as a hardship that we have to start pushing in New Jersey is incurring unnecessary and excessive professional fees. Now, I know it's hard to believe that any professional fee could ever be unnecessary or excessive, but there may...
Not for ours, maybe yours.
But, right, maybe, right, your defense is, I shouldn't have to hire Frank. Judge, that would be a hardship, right? So why can't we cut to the chase here and do what's right? All right? So the federal government in the statute in 7811 has now recognized that incurring unnecessary and excessive legal fees to get a right or a benefit that is required by statute is a hardship. So we as tax professionals have to also push that in New Jersey. You shouldn't have to go to tax court. You shouldn't have to sue to process your offer in compromise, right? So that's just new advocacy where I think we as New Jersey professionals should go. It's not currently the law. All right. How do you file the request? There's a form that you file. They will take it by fax. The Form 911. Right. This is in the materials. All right. Now I'm going to use hopefully the rest of my time to talk to you about amnesty, what is doable in amnesty, again, why participate? Because we owe money. The state needs $200 million. We're going to collect it in this amnesty. We can get a reasonably good deal. What is covered by the amnesty? Balances due, non-filed returns. And it's really broader, and I'm going to explain why. You can get rid of penalties. Right. The only penalties that aren't covered right now, they say, are the criminal penalties. We can cut the interest as of November 1st. You can get rid of all those irksome cost of collection and recovery fees. All right. When do you apply? Right now, it is limited to January 15th.
We got 5 days.
Statutorily, you got 5 days.
You got till midnight.
And there is no statutory extension of time that is available. Okay. Remember I said to you that there is the Form 906? The Form 906, so far, we've been able to use to include tax returns that are outside the amnesty period, right? So the amnesty period says February 1, 2009 through September 2017. I've talked to a lot of practitioners so far that they have said that, look, when they want to resolve all the taxpayers' matter. It makes no sense to resolve some of the matters. So that they've been able to go in, put what you need in the amnesty years, then prepare the 906 proposing the same deal for the non-amnesty years. And practitioners have been successful with that.
So you mean it's 2007?
Correct. Right. I anticipate that some settlements that can't be completed by January 15th, you should start talking to your people in New Jersey about doing the same thing with the 906s. Using the 906 as a way to get to yes and expand the time on the amnesty. Say your client's going to need that extra week to get the check, or 2 weeks, right? It's not going to go 6 weeks, it's not going to go forever, but there's going to be some room. Talking to the people, right? If they've already invested some time in it with you and you're getting there, there's going to be a way to get those near misses, right? To get them closed and get the benefit of it. So don't give up and say, hey, we're not going to get it done by January 15th. If you're working with a case and what you are saying makes sense, and the amnesty deal makes sense for both the state and the taxpayer, continue working. Because although nobody officially has said this to me, my gut is that the adults at the state will want us to meet our amnesty goals for collection.
By the way,
yes.
I've noticed, I don't have a lot of experience with the amnesty, but one case I'm working on, it goes back to 2008, but 2008 is on their website.
It's not going to be. You've got to act proactively.
But and 2016 isn't, so you have to go into a separate section
below saying what's not listed.
Absolutely. Look, that's our job. Right? The computer is going to be set on what they've sent notices out on, and they know about it. But the amnesty by statute is much broader. So it's our job to understand everything our clients owe, what the state has found and what they haven't, and figure out how to make the amnesty work for them. Right? Because what's eligible? Every tax administered by New Jersey Division of Taxation is eligible for amnesty that's within the periods. And if it's not within the amnesty, it will be eligible on either the offer and compromise or the 906. So again, if we're working in good faith, we're trying to get the yes, that the worst they're going to say is no. All right. So what is an available criminal investigation is not available. And what can't they do? There's certain settlements that if your taxpayer is in bankruptcy, they can't do without the bankruptcy court approval. Yes?
If you're in the middle of an audit ongoing right now,
Yeah.
say Jersey going back for the years that, let's say 13 through 16,
Yeah.
13 through 7, and you don't think it's going to be fully resolved by the 15th?
It's going to be, you're going to talk to a manager, you're going to escalate, and you're going to get it resolved. Look, we've got cases in the tax court that, technically, like, how are you going to get them done? Everybody is trying to work for yes. Everybody in New Jersey, everybody working for the state has been told that amnesty is their top priority. If the taxpayer wants to talk to you about amnesty, let's figure out a way to make it work. So you go to the people that you're working the audit with, say, I need to talk about the amnesty. We need to get this done. Let's figure out the adjustments. Whether it's a restaurant audit, whether it's an inventory audit, whether it's an unreported income audit, there's always ways that we can cut to the chase, get it done, get New Jersey a check, and end it.
And if you can't get it done by the 15th?
Then, again,
Is this Form 906 something that would work?
for a very short period of time, right? Because the 906, the 906 is to challenge the liability, But you're not going to need a 906 to finish the liability if there's an audit, because you're going to get to the right liability at the end of the audit. The only other exception is doubt as to collectability. So if your audit isn't done just because of the time, and the taxpayer has the ability to pay, the 906 isn't going to help you. The only thing that's going to help you is talking to a supervisor now and making an amnesty deal.
The
Yeah.
thing I'm doing is, let's say I think their calculation is wrong. Like, I'm just gonna say to the guy, pay it and then get a refund later.
There's no refunds of
No refunds on the
amnesty.
amnesty. Get
No,
your bill right.
but the thing is, it doesn't, when you try to put in a number, he screwed up big time. He was making payments that didn't make sense. But
That amnesty isn't the answer for that. Amnesty's not going to be the answer. The one thing that there is a problem right now, I think, who's having problem with the interest calculator on the amnesty?
oh, it is, it's insane.
Right. That is a problem.
That's been a problem from,
Yeah.
from,
Everybody's having some problems with the interest
From day
calculation.
one.
You gotta double check your interest calculation, because sometimes they're coming up with interest that's 3 or 4 times what the commercial software is coming up with.
well,
Yeah.
So one of our members was told that they're calculating interest on the abated penalty.
that's correct. That is correct.
That's what they're doing.
Yeah,
On the $100, they're calculating it also on the $100 a month penalty, which they never charge.
Oh, they sometimes.
I got a $47 sales tax, that's $5,500
What they're
penalty.
doing is they're freezing it as of November date, saying we're taking it off, but interest is based on that number
My
up to
question-
that date.
Yeah, my question on that, I was gonna get to that, but you brought it up, is that, let's say their interest calculation is wrong, and we dispute it, we wanna pay the smaller amount. Are we gonna find out by the 15th that that's acceptable? Because if we don't pay the full amount, we don't get amnesty.
I don't know, those are calls, and I would be calling up the chain of command. I mean, the people at the taxpayer, New Jersey has the amnesty line, and there's also something called Taxation University, right? Taxation University has 10 people assigned to it. And they're gonna kill me, I know you're watching. They actually answer the phone. Everybody in New Jersey has been tasked with solving amnesty problems. Call the people at tax, if you can't get through in the amnesty line, you can't get it fixed, you call the people at Taxation University, explain your problem to them, and ask them, like, to help you get through the system. Those people have been phenomenal, all right, with helping you solve the problems.
Are they part of the state?
They are part of the state.
How do you get
What's
the
their
number?
number?
How do they-
How do we get their number?
It just seems to be some systemic problem like charging interest on penalties should be something
Do I have their
they
number?
they have to have an open answer on that.
Ken, I also spoke to the practitioner hotline, and they started
They don't help
a
someone
case on it. They could not get involved in the amnesty itself,
They tell you that
all
on the
right?
sheet.
But in fact,
They
they
will
have,
answer.
they have a case, and I gave them the information on,
I
the
understand
taxpayer
what you're
ID,
saying,
whatever, and they
but
said,
we have
yes,
to
it's
have
filed
an answer
out.
by
Okay.
Tuesday.
Email, okay. For those of you who have real problems, email me, and not on tape, I will forward you the telephone numbers of the people at Taxation University who can help you.
What she's just saying is that by statute, they're
I
supposed to
think this
charge you interest
amnesty
on the
program,
penalty.
they are not gonna, they're gonna still charge interest even with that penalty that was paid.
That's what they're doing.
Yeah, that's a multi-state tax conference for the NJCPA.
Was
Trying
that
to think of what his name was.
Tom McDonald?
No, the state of New Jersey was there also. They didn't contest it when someone brought up the exact same question. But I think during this amnesty program, even if they abate your penalties, they're still calculating interest on 100% of those penalties.
It's not like the
So
previous
you have a bill,
amnesty.
you have a bill for tax, interest, and penalty. Penalty is waived, interest is halved, period. Interest is not reduced to
Yeah.
reflect what it would have been absent the penalty.
Yes.
Well, past amnesties have done that, though.
But I don't think this one is, and they have the program set up in that.
But they didn't tell,
Matter.
except for that guy, I don't think anyone else knew that.
But the
Until
problem
now.
is, that they don't give us the interest they don't give us the calculation
No,
at all.
no, just give you
And if you
numbers.
try to do it yourself, no matter what, in T-value or anything, it just doesn't work.
Okay. I don't know the answer to that question. I mean, I've heard what she said before, but I don't know that that is the official answer.
I think the
of
director
the
confirmed
state
that.
of New Jersey.
at a
Oh,
meeting.
Fakara did confirm
I
that?
think so.
Okay. Again, that, I had heard it. I didn't know that there was an official determination on it. Right, what happens if you don't get it? They're gonna, if you don't resolve your cases during your amnesty, yes.
Before you go off that last screen, yeah. What do you suggest when the client gets a amnesty thing to file tax returns or tax periods that aren't due?
Well, then you don't need amnesty for that, because if there's nothing due, then you're just gonna go through the regular procedure and you're gonna file 0 returns.
Well, I have one, for example, it's a non-profit organ, not a charitable, but it's a non-profit organization, never had employees, never filed payroll tax returns, got some amnesty that they have to file payroll tax returns, quarterly payroll tax returns. They've never had employees, and
So then
I called the amnesty, and they're
They don't
very
even-
nice, and she
they
said,
don't even work
well,
for
the
the
easy,
state.
she says, oh, what you have to do is
They're
file
not
all the tax returns.
Oh, it's Pioneer?
part of Pioneer.
Oh,
She said, file all the quarterly tax returns with showing 0. I said, but they don't have employees, they never had employees, why should they?
Because it's the practical way of getting it done.
But then you're
I'll tell
going
you,
to be doing
people
it
answer the
forever,
phone
because
there
once
are
you
more.
file it, you're going to be in the system to file in the future.
I know. Look, there are certain things where
Can't really answer.
it's harder to bring the lawsuit to get them to do the right thing than it is to just file the 0 return and get it done, right? And with the 0 returns, you send a letter saying, we're filing these 0 returns, but we don't believe any returns were ever due. And hopefully an adult figures it out.
Why don't you just file returns and file an REGC at the same time and it
Exactly.
goes away?
Yeah.
That's true.
No letter, just
Okay, next, what happens if you don't file? They're gonna add another penalty, and again, until there is another amnesty, the penalty is not abatable by conference and appeals or by the tax court, right? They're gonna treat, and like all the penalties from the prior amnesty, the courts have been very difficult, yes.
Didn't we have after the last amnesty, the UPS case, where they successfully
Yeah.
argued that you can't have every taxpayer be a mind reader knowing, for argument's sake, that we have some unsubstantiated travel and entertainment expenses, and thus we should have known that our taxable income was underreported and we should have amended the returns and not waited to get audited. So this penalty, as opposed to a true tax scofflaw, and I'm talking as a non-attorney layman, and they won on that argument.
Sure.
And I was at a meeting with Denise Lambert Harding and Director Fakara, and they said that they will entertain abatements, even though they're using this language, and their little card that's in the lobby here says again, the threat of the 5% penalty, that it's not going to be 100% automatic, slam dunk, with no recourse to remove it.
All right. Remember UPS, remember the facts of that case?
Do I remember them?
Yeah. Would you ever, under any circumstances of life, would you have ever put a penalty on that case? How could those people have known that they were going to recharacterize that debt? New Jersey, that case was an issue of first impression, right? And they still attempted to impose the penalty. And they had to litigate and spend a lot of money. What the lesson to be learned from that case is they're imposing the penalty, even in cases where you think it would be crazy. And if you want to fight the penalty, you're going to litigate, right? I was on a panel right after that case came down, and they were deciding whether or not they needed to appeal. Because from a policy point of view, they want all of us to believe that that penalty is non-abatable, and that you're going to need to spend the money to litigate in order to get that penalty abated. And that's what it's been for me, right? I probably have more cases in the New Jersey tax court than most of the firms in New Jersey. And unless I'm willing to push it to the wall, they're not walking away from the penalties from the last amnesty.
And of course, if you're talking about a couple $100, you're not going to fight it. You got to be realistic.
It's a lot of, unfortunately, people aren't hiring me for cases that are a couple $100.
Same here. Client gets a $200 penalty notice, I tell them I'm not fighting it, the fees will be more.
So it was a big dollar when you pass, and I agree with you. You should fight the penalty. If there is no rational basis, right? If the tax is imposed on an issue of first impression, right? Like a pre-2018 Wayfair type tax. How can you say that we should have filed in the old amnesty if the law changed?
But I knew what happened.
But I also am
We can be hopeful we have a new director compared to when UPS, I believe.
yeah, no, I think everybody in management at New Jersey is great. I mean, I think that they're very, very reasonable. But I also see when the when the legislature has said a penalty is not abatable, they're going to be hard pressed to take a position contrary to what they think the legislative mandate is. Right? Because they're responsible administrators of the fisc. All right. Again, CODs, they've been very good at giving you the warrant of satisfaction on CODs. So even if a debt is on a COD, it's eligible under amnesty. Again, for those cases that we settled using the 906, we were able to exchange the check for the warrant of satisfaction. So they say that the amnesty doesn't guarantee that you're going to get the warrant of satisfaction. Now, why are you going to give them a check if the lien is going to stay in place? You're going to be able to work that out, not in the time that's left, but that is something there. Again, bankruptcies, different story. If your taxpayer is in bankruptcy, you're not going to be able to take advantage of the amnesty without the court order. Voided and revoked companies, right? Those are you're still getting these debts. They're working with you to reinstate the companies, take care of the amnesty. The reinstatement fee is not included in the amnesty, right? Lots of taxpayers are asking that question. The reinstatement fee is not included in the amnesty. Taxpayers under audit are eligible for the amnesty. All right, last piece of the amnesty, and I think how much time do I have left?
Try to wrap up in a couple
Okay.
minutes. Yep.
The IRS and the state of New Jersey have a treaty. Anything you file under the amnesty, you have to assume that the IRS is going to be requesting under the treaty with New Jersey. So if you are filing an amnesty application and the amnesty will change a federal liability, then you have to decide whether or not you're going to file an amended return with the state. Now, the rules on this are the exact opposite of the rules of the Notice of Federal Change. Right? Notice of Federal Change. You file a federal amended return, it automatically extends the statute of limitations on the state return. Filing the amnesty application does not extend the statute of limitations on the federal return. So whether or not you file the federal amended return, you still look at, one, are we beyond the 3-year statute of limitations? 2, do we fall into an exception to the 3-year statute of limitation because the amnesty application is more than 25% of gross omission of income? And then finally, if you're filing 3 years or more of amended returns in the state of New Jersey, you have to say to the feds, will the IRS, when they get the information as a result of the amnesty application, begin an audit because of fraud? You know, once is a mistake, twice a coincidence, 3 times is a pattern, right? So if you're worried that it's going to be open because of fraud, then you have to look at the IRS voluntary disclosure policy. It's in the materials, but the IRS has a new unified voluntary disclosure policy that both federal and offshore income, same program. That's going to require the filing of 6 years amended returns, and there may be one fraud penalty that's going to be asserted. All right, so that's the basics of New Jersey procedure. I think I've used all of my time, and if you have any questions, otherwise we'll wrap up. Thank you.
I'm the next speaker. Close out your.
Excellent.
Thank you. Oh, perfect. I always am challenged to make this full screen. Let's see if that will do it.
No, it's not.
Well, we're gonna live with it like this because oh, yeah.
Hit that black arrow on the right hand column.
Which one?
Right in the middle of the screen.
Come down,
Right,
up, come about halfway down the screen.
This?
Yeah.
It's not. Hold on. Nope, it's not doing anything.
Sure.
Oh, there we go. Very good. I guess the bottom, we'll leave it. So picking up on amnesty, I'm Neil McCourtney, by the way, if anyone doesn't know who I am. I've been doing this for just a few years. So I live in Bradley Beach, New Jersey, and there's a local paper called The Coaster that covers Bradley Beach, Ocean Grove, Asbury Park, Neptune, Ocean. I used to live in Oradell in Bergen County, where we had the Suburbanite, which was Paramus, River Edge, Oradell. One of these papers that they actually sell it for 50 cents, but you get it for free in the library and various restaurants. That one, the Suburbanite, you got at your doorstep. If it rained that day, it was unreadable because it was a soggy mess. It has local police blotter and the local high school sports activities and advertisements for businesses. You get my gist. So I'm looking at this thing, and what do I come across? This is recent, December 20th. Letters to the editor from John Ficarra, Director, Division of Taxation. I've been amazed at how much advertising that they've done between the TV commercials with the tax forms that magically form the gift box, the gift that,
Keeps on giving.
And this gift's not going to be here every year. Of course not until the next amnesty in about 5 years. The radio spots. I was on Route 78 the Monday night coming home from a brief air trip from Newark Airport, and they had a billboard that even said, only 7 days remaining. Okay, or 8 days. It was January 7th, Monday. The cards that were in the lobby, the highway billboards, it's just, to me, startling. I read something that they had a $25 million budget for the advertising and the staff to administer. So here we have in this little local newspaper where you're looking for a coupon for, buy 6 bagels, get 2 free, and you got John Ficarra with his plea about amnesty and the phone number and the due date. So I thought that was interesting. And then, then this picture's hard to see because of its photocopy, but on the division's website, like today, they have in the bottom left, they always have a public service announcement. Sometimes it's about inclement weather and drive carefully, and today they actually mentioned that the amnesty department will be open on Saturday, January 12th. But a couple weeks ago they had this: don't be a Grinch and ruin your holiday season, take advantage of New Jersey tax amnesty. And it was red and green. I mean, it caught your eye if anyone saw it. It's a little harder to appreciate from, when you photocopy something in color, you lose the true texture of it. Okay, so those are 2 things on amnesty, and I'll mention something about interest when I get to that. I came across this on the website from the division, Q&A pertaining to the Wayfair decision, and I thought it had a lot of good, useful information, and even things that you can think about for other states if you have affected clients. I'll read some of it. How does the law affect a remote seller's transactions prior to November 1, 2018? The law applies on a prospective basis. Note that sellers that have a physical presence in New Jersey or that are otherwise legally obligated to collect and remit are still responsible for collecting and remitting sales tax on sales made before that date. How is the $100,000 threshold calculated? Now, this is New Jersey. Every state's different. All sales delivered into New Jersey are included, including non-taxable retail sales. So you could have, 300,000 of sales into the state, 290,000 are exempt for resale, but now you have to start charging on the 10,000. So you don't look at just the taxable sales, it's the gross sales. Now, other states are different. Some states, their definition, the 100,000 and the 200 transactions is taxable only, but New Jersey's is total. How does a remote seller determine whether it's required to collect tax in 2018? Once you exceed 100,000 or the 200 transactions, you're required to collect tax for the remainder of 2018 and all of 2019. How does a remote seller that doesn't meet the threshold in 18 determine whether it's required to collect 2019 forward? If the remote seller meets the economic threshold in 19, the remote seller is required to collect sales tax for the remainder of 19 and 20. If the remote seller does not meet the economic threshold in 19, it's a year-by-year calculation. When is the remote seller required to begin collecting sales tax? Required to register and begin collecting on transactions that occur after the threshold is met, subject to the grace period below. Next Q&A. Once the economic threshold is met, is there a grace period? Yes. Grace period up to 30 calendar days. Then they give it what I thought was a useful example here. Remote seller has gross revenue of $90,000 generated from sales of tangible personal property delivered into New Jersey. Remote seller then makes one sale of $25,000 from the sale of tangible property delivered into New Jersey. As a result of the sale, remote seller's gross revenue of tangible property delivered into New Jersey is $115,000. Remote seller is not required to collect and remit sales tax on this transaction, which causes its gross revenue to exceed the threshold. However, because remote seller met the threshold, remote seller is required to register with New Jersey and must begin collecting and remitting subject to the 30-day grace period discussed earlier. So that's how that works. And that's all I'm going to talk about that. Next, New York State, I'm on their practitioner distribution list. They put out a warning. New York State Tax Department shares security tips during National Tax Security Awareness Week about cyber thieves targeting tax professionals and businesses. In recent years, cyber criminals posing as company execs and using social engineering tactics have convinced payroll and HR professionals by email and phone to provide lists of employees and their personal info. Scammers have pilfered confidential data in a variety of industries this way, including school districts and nonprofits. Identity thieves have also targeted tax professionals by posing as return processors, tax software representatives, and as clients to gain access to records containing sensitive personal and tax info. In one scenario, a scam artist poses as a client, sends an initial email request for tax preparation assistance. It's followed by a second email with a link or an attached PDF that contains a link. If the preparer falls for the scam and clicks on the link, malware is installed on the preparer's computer, allowing the cyber thief to steal the preparer's password and access confidential client data. Scary stuff. One of my partners, maybe 2 years ago in my firm, got an invite from a doctor client for a holiday party. And he answered it, yes, and all of a sudden his computer got infected, and then other people in my firm who got emails from him. Then he first emailed the client, did you invite me to a holiday party? He said, we're not having any holiday party. So you think something as innocent as that, you got to be careful.
Good thing he was going to the doctor.
Doesn't Windows 10 have certain protections?
But somehow this, these scammers are very clever. With all you hear about all these phone scams where on your caller ID it says IRS, it's called spoofing, and then they get on, this is John Smith, badge number such and such. If you don't pay $9,000 by tomorrow on a debit card, you're going to jail. All that good stuff. Okay, next. So New York State came out with this cockamamie end around for the getting around the SALT deduction limit, where you could move the tax to the entity level. And I spoke about this at prior meetings, and I've read other practitioners' comments. So this article says that a whopping 262 businesses opted into this. Okay, at the top it begins just over 260 businesses. Third paragraph. The fact that hundreds of employers have registered for the alternative ECEP, which stands for Employer Compensation Expense Program, shows that the business community is taking this federal tax threat seriously and many are taking this step to protect their employees. I mean, this person is out of their mind, because as it says at the bottom, according to U.S. Census Bureau, there were over 2 million firms in New York in 2012. It's probably higher today. So out of, let's assume it's up to 2,300,000. 262. It's like 1 in 100,000, if I have my decimals correct. It's crazy. Basically nobody went into this thing because it was so unworkable. Okay, you just talked about the interest on the amnesty. I mean, without compounding, I had a client where there was a desk audit for 2013 and then an amended return for 2014. One was where we got an amnesty ID, so they did the calculation right then and there, and the other one was where you put in the tax number on the outreach section of the website. And I was able to see, just using these rates, I mean, the rate has been 6.25 since 2010 through 2016, then it went up to 6.5 for 2017, and 7.25 for 2018. Now, without compounding, I did a back-of-the-hand calculation where I came out that the interest would have been, 27%, and the interest that Amnesty was giving me was 14%. That passed my smell test. That it was half, back of my hand, without compounding. That it was within reason, and that it was certainly, could it have been off 1%? Should it have been? It was 50%, but maybe they only gave me. It's only a 49% savings. I mean, I hear this issue with the interest on the penalties.
Yeah, that's incredible.
But again, with that $100 monthly penalty, that's where you have no tax. You could have, or you had the $500 tax. The penalty is, $100 a month for 5 years. The penalty is $6,000. The interest, that's a kind of an anomaly. So the couple that I've seen, the interest again based on this going rate has seemed within reason to me. California came out with a recent ruling as far as Public Law 86272. The issue is delivery of tangible property via private vehicles, not common carrier, instead of a common carrier, considered protected. And without reading this whole ruling to you, which goes on the next page, the conclusion at the end, accordingly, delivery via companies' own vehicles is considered protective activity. This is just California now. Because I've always used the mantra, you send in salespeople, they knock on doors, whether it's existing customers or prospects, they take orders are approved outside the state for delivery into the state via common carrier. Now, of course, if you're delivering with your own trucks, it wouldn't be that far-fetched that the next thing you're doing is installing whatever you've sold. Now you've crossed the line, or you're giving training. But what?
Were you picking up a check?
Well, who's ever going to? Could you imagine a salesperson saying, "Oh, I can't accept that payment. That's going to exceed solicitation. Please put it in the mail to the home office." So that was California's recent. Senate bill looks to delay online sales tax collections. Senate Democrats from states with no sales tax, which didn't make a lot of sense, introduced a bill, there's only 5 states with no sales tax, that would ban retroactivity, delay collections until 2020, and require states to join a compact in order to collect online sales taxes. Third paragraph, forcing New Hampshire businesses to adopt and adhere to a new complicated tax collection system, particularly as retailers approach the busiest time of the year, is entirely unfair and impractical. Senator Janine Shaheen, it's a tough name, said. But if the state doesn't have a sales tax to begin with, how does Wayfair affect them?
I think they're talking about
citizens.
New Hampshire's people being required to collect other state taxes. Because those businesses...
New Hampshire businesses...
New Hampshire businesses aren't set up to collect sales taxes.
Because that's because New Hampshire doesn't have a sales tax, but now Wayfair would make a New Hampshire business collect New Jersey sales tax. Like Okay,
and
got
they
it.
don't have sales
I just wasn't, fine, thank you for clearing the cobwebs in my head. I just wasn't making the connection why those 5 states, I think Oregon, Delaware, New Hampshire, I forget who the other 2 are, that don't have a sales tax. Very good, now it makes more sense. New Jersey Tax Division's discretion not boundless, tax court says. I'll just read the first 2 paragraphs. New Jersey Division of Taxation Director's authority to apply an alternative method of apportionment is not boundless, must remain within the confines of the state's constitution and the Administrative Procedures Act, according to tax court. Tax court ruled in Canon Financial Services Inc. versus Director that the 5-factor formula proposed by the state to assess Canon's financials tax allocation, the company had proposed three-factor formula, should be revised, partially limiting the director's authority. And if you want to read more about this case, it's another full page and paragraph. U.S. Supreme Court rejects California delinquent taxpayers list appeal. The U.S. Supreme Court will not hear a challenge to California's law requiring the publication of the names of delinquent taxpayers and suspension of their driver's licenses. Frank touched on that with New York. In a December 10th order, the court denied certiorari, that's the right to hear a case, in Franceschi versus Yee, letting stand the decision of the U.S. Court of Appeals for Ninth Circuit that publishing the list of California's top 500 delinquent taxpayers and suspending their driver's and occupational licenses do not violate the U.S. Constitution. Under a 2012 California legislation, Franchise Board is required to publish at least twice a year the list of the 500 largest state income tax delinquents exceeding 100 grand. FTB is required to provide 30 days notice before adding a taxpayer to the list to allow that taxpayer to either pay or enter into a payment agreement. There's now a new, for New Jersey, there's going to be a unitary business questionnaire and combined group index if you have clients that are affected. Again, this begins for years ending on and after July 31, 2019. You can read that. And there's going to be an NOL conversion worksheet, Form 500-P. Meanwhile, they still can't get the CBT forms out that for your, your fiscal year entities. New Jersey is the only state that doesn't issue the forms annually. They do it on the July to June cycle.
That's it? Only New Jersey?
I don't know of any other state. I've never seen any other state that has a form like that where you're filing, the federal, like for a September 30, 18 year, it's a 2017 federal return, but a 2018 state return. I've never seen any other state like that. And this year, of course, with all the Tax Cuts and Jobs Act changes, especially the international changes, have, I understand that, it posed issues for them. So you still can't file. Now they've extended the deadline to February 15th for those returns that would have been due sooner. But now we have this new NOL worksheet that you'll have to deal with. Okay. New Jersey Tax Court finds partnership fee regs invalid. New Jersey's partnership filing fee does not violate the Dormant Commerce Clause of the U.S. Constitution, but the regs apportioning the fee are invalid according to the tax court. In two opinions issued December 7th, Feral Gas Partners and Targa Resources, these are those nuisance K1s we get from our clients, where you have 18 pages with $42 and $9 and $6, and the client sells 3 units and buys 2 units and sells 4 units, ridiculous, the amount of work involved for these investments. Distributions are great, they always tell me. And the tax reporting is horrendous, I tell them back. The Jersey Tax Court determined that the regulations apportioning the flat filing fee based on the lack of nexus of a non-resident partner exceeded the scope of the statute, which does not provide for any apportionment. We all know about the $150 partner fee, capped at $250,000. I doubt we have very many clients that we handle that have a fee that high. Feral Gas Partners did not challenge the regs, but argued that the regs do not cure the constitutional issues with the fee. The partnership claimed the court could cure the fee of the Dormant Commerce Clause violation by applying the apportionment in the regs to the capped amount. Targa argued that the regs were invalid, claiming that a fair apportionment of the fee would use business allocation percentage instead of the corporate allocation factor used by the regs. Next page, I have some, I'm going to read the last 2 paragraphs. The court also determined the apportionment method permitted by the regs exceeded the statute's plain language and intent. The court noted that only partnerships with non-resident partners get the benefit of apportionment, while partnerships with only resident partners have to pay the full fee and they do business in multiple states. Though the court acknowledged that a July 2016 bulletin by the division stating the fee applied if the partnership has New Jersey sourced income or resident partner conflicts with the statutory language imposing the fee only on partnerships with New Jersey sourced income, it did not answer whether the fee would apply to a partnership with a resident partner but no New Jersey sourced income. So absent these mammoth, these partnerships with thousands of partners, these publicly traded partnerships, I don't see this impacting, our typical 3 to 10, 20, partner. You have to have more than 2 partners. 2 partners get a freebie. Company allowed to use 3-factor formula apportionment. New Jersey court says taxpayer maintained a regular place of business outside New Jersey was entitled to apportion its income for CBT using the 3-factor formula. The only reason I included this in this handout is I'm just startled that you've got a case that was just decided in late December of this year involving the periods June 2008 through June 2010. It's just startling to me how long it could take if you go to court to resolve a matter. That's the only reason I included this, but if you want to read it, you got 2 pages. This got some buzz last month, although I haven't heard anything recently. If anyone in the audience has heard something about the New Jersey doing similar to what Connecticut did, which is moving the tax on a pass-through entity to the entity level. So take your one shareholder S corp, $1 million profit, New Jersey resident. Let's assume, for simplicity, not a multi-state business. You end up paying roughly $90,000 on that $1 million profit personally. Of course, that $90,000 state tax is wasted with the $10,000 federal SALT deduction limit. But if you can move that tax to the entity level and make it an entity deduction, now your income just dropped to $910,000. And this passed the Senate 40-0. Clearly had bipartisan support. Then they talked about graduated rates on this thing, which is in the second paragraph you're looking at. And there's mention that Connecticut enacted pass-through entity tax like this back in June, Wisconsin. I've seen a couple other states here and there. But just like the New Jersey wanting to make marijuana legal, and what's the other big issue that Murphy's been pushing?
Minimum wage.
The minimum wage, $15. It's all talk, and nothing seems to be happening.
That's what they hate.
Doesn't that cause a burden on non-residents?
Yes, because you lose your resident credit.
Right.
Like with Connecticut.
I was just talking, I have a client that has a business in Connecticut, and he's going to pay the entity level, and he's also going to pay New Jersey with no credit for taxes paid to Connecticut.
But you'll get the federal deduction for the...
Get the federal
right,
deduction.
but a non-resident taxpayer gets harmed because the tax now became an entity level tax, and you can't claim a resident credit for that.
Because he didn't pay any Connecticut individual tax.
Exactly. Exactly. So it's good for resident taxpayers, but it's not not good for non-resident taxpayers. It solves one problem and creates another one. Federal bill would nationally regulate sports betting. Nothing that exciting there. What's it called? The Sports Wagering Market Integrity Act. This one has bipartisan support. Senator Orrin Hatch, who at this point now has been left the Senate. He didn't run for re-election. And Chuck Schumer. See Chuck Schumer's new name from Trump today? I was reading.
What?
Now he's referring to, because Schumer and Nancy Pelosi appear now as a tandem. Crying Chuck. It's Crying Chuck and Nancy. He said...
I think he's used that before.
That's the first time I heard it. I mean, I'm a junkie watching MSNBC and CNN at night, so you can figure out who my affiliations are with. But in this, he had a 15-minute White House lawn tirade before he got on the plane to go to the border to argue for his wall, and he said that dealing with the leaders of China is easier than dealing with Crying Chuck and Nancy. That's what he said today. Unbelievable. Oops. Okay. How come we don't have lawmakers like this in New Jersey? Texas lawmaker files resolution to prevent individual income tax. A Texas lawmaker is pushing for a state constitutional amendment to bar the legislature from imposing an individual income tax. As we know, Texas has no personal income tax. Jeff Leach is this person. Leach, in a December 18 release, said he looked forward to working with other lawmakers to ensure that Texas taxpayers are protected from the possibility of the creation of a personal income tax, which would have disastrous effects on the future of our great state. We must continue to pursue and advance policies that protect and strengthen the Texas miracle. Texas miracle. I know that when Miami beat New England, a couple weeks left in the season on that crazy flea flicker, that last second pass, they called that the Miami miracle. I don't know if they call Florida's lack of a personal income tax the Florida miracle, but this is the Texas miracle. Starting with ensuring that Texans can keep and control more of their hard-earned tax dollars in their own pockets. So we don't seem to have that going on. Last thing before I get to it. So who thought coming into this filing season that you would never ever have to, at least for the next 7 years through 2025 when all the TCJA individual provisions expire, who thought you would never now again have to concern yourself with unreimbursed employee business expenses, on the 2106, with investment advisory fees from your brokerage 1099s? Anyone think that you'd never have to bother with that again? You'd have a little bit, life would be a little easier? No. Well, not if you're dealing with New York. No. If you remember the New York speakers we had here a couple meetings ago, from Hodgson Ross. They talked about this. So New York's decoupled from basically everything. So you still have basically the same itemized deductions in place that you had pre-TCJA for New York purposes. You have a new form, I didn't include the form, you have a new form IT 196. So you still have your miscellaneous itemized, your investment advisory fee, your job search, your 2106, your safe deposit box rental, all that stuff that you thought, if it's a New Jersey resident only, you can ignore that stuff. But New York, and there's a couple other states I've seen, California kept the 2% floor, so it depends on the state. I mean, obviously, if your client lives in Florida and there's no other states, you can ignore, the client gives you that information this year, you can ignore it. Not only that, New York State has decoupled from alimony for the federal, so a future divorce, a post-12/31/18 divorce, where the alimony is not deductible and it's not taxable to the recipient. New York, it'll be still deductible and taxable. New Jersey had said that they were also going to continue deductible and taxable. They weren't going to adopt the federal rule. And still have moving expenses now for New York. And the 529 plans, where now you can use them for K through 12, not for New York purposes. So if someone took a withdrawal to pay for private school for K through 12, where it's not taxable for federal under the Tax Cuts and Jobs Act, it will be taxable for New York. So that's just going to be more fun and games. Does anyone see, I don't have it here obviously, and this is not the purview of this committee. Does anyone, who's not laid eyes yet on what the new 1040 looks like? Not laid eyes.
What a piece of crap.
Oh, page 1 has no numbers on it. Name, address,
But one
and
and
you
two,
sign.
1 and 2.
Then you have your schedules 1, 2, 3, 4, 5, 6 with half the lines labeled reserved, and it's
And they don't
there's
add.
no more 1040EZ. So if you ever did your kid, you got a W-2 or client's child, no more short form. It's going to be an interesting filing season. Last thing, query from me. This is something we've been talking about in my office. I don't know if anyone else has talked about this. So we got the $10,000 SALT limit. So for anyone who's a homeowner in this state, the likelihood is your real estate taxes are more than 10 grand, which means your state income taxes will save you 0.
Okay.
So our strategy, our thought is that we should not claim a state income tax deduction on any such taxpayer's 1040 for 2018. Why? To ensure that not $1 of a state refund is taxable. Let's say you have someone who's got, I'll make the numbers simple, $15,000 of real estate taxes and $30,000 of state withholding. So it's 2/3 state withholding, 1/3 real estate. If you put those on the Schedule A, $45,000, where you get your $10,000 deduction. And in this simple example, $30,000 of withholding, the state tax comes out to $26,000. So you get a $4,000 refund. Okay? Now, if you don't claim that $30,000 state tax deduction, you just claim the $15,000 real estate, you're still getting your $10,000 federal deduction. Doesn't that automatically make your state refund fully non-taxable?
Sure.
And unlike income, where you're obligated to report all your income, I'm not aware of any requirement to claim all available deductions.
I don't see,
I'm not sure that's entirely true.
under the tax benefit rule.
Wait, let's do that. Right, so now, tax benefit rule, wouldn't there be an argument that, so you had in my example, 30,000 state income tax and 15 real estate, 2/3, 1/3, I made the, okay? So, didn't I get a benefit in theory for 6,667, 2/3 of the 10,000, and thus isn't a piece of my state refund the 4,000 taxable?
I don't think so, because...
Well, so so you're saying then that the real estate taxes come first?
You're talking about apportionment of the...
Right.
Yeah, I don't think so, because it's sort of like AMT. It's that if you put it on the return, you don't get a benefit, therefore it's not refundable, therefore it's not taxable. The fact that it's on the Schedule A does not give you a benefit.
Wait, but so
the
you...
tax is computed the same
Right.
way, so there's no benefit.
So what you're saying, Ken, that's why I have a discussion. What you're saying is that the $10,000 deduction, in your view, is used up entirely by the real estate taxes.
That's what I'm saying.
And what's the justification for that position?
Because what I'm saying is that, and again, you have to look at the statutory language, which
I don't think this is addressed in the
But let's say you had the 15 and the 3.
30.
If you put the 3 on the return, you've got no benefit because the tax liability will be the same with or without the 3. So without the 3,
30, mine's in.
whatever
30 of
number,
withholding.
without the income tax deduction, you have the same tax bill. So you've got no benefit by putting it on Schedule A.
I understand that, but again, does it call for a proportional, that's why I made it 2/3?
Well, you have to look at the regulations exactly, but AMT worked that
Looking
way.
at some of the tax software, they subtract the income tax, they add, or whatever the state tax is, they add back the sales tax, and then compute the change in benefit.
Well, sales tax is a different story.
No, but
If you take the optional sales tax
They
deduction.
determine in certain software whether there's a state tax benefit. I
Yeah.
don't know
Under
whether that's right or wrong.
right, in the past with AMT, yes. We're in a different environment now.
I believe what Ken said is correct, because my tax software, when I was at a seminar with them, that's how they said they are handling it.
Norm, by the way, that argument, as much as I feel that my answer is the correct answer, you gotta read the statutes, because I will not, and at this stage of tax season, I will not trust my tax software as authority for what the law says.
So we use in my firm, we use Access, the current Pro System product. And we're having upcoming, the once a year update training. And I asked our point person internally, are they gonna have a box in their input to suppress the state tax deduction? Because I'd like to not even show it. Now, you need to enter your withholding on your wages and maybe pensions, and you need to enter all your estimated payments so they flow to the state return. The answer I got right now is no. There's not going to be such a box. So we don't want to start now putting a minus in that example, minus 30,000 state tax to remove it. Steve?
The other issue you have is almost like on earned income tax credit, where if you didn't claim deductions to create an income higher than what you were supposed to, the government said that was illegal, if you remember. So you could draw a parallel to this.
You want to say something behind Steve? No? Oh.
I don't think
Oh, you-
it's the same.
What?
I'm not sure that's the same.
Well, you're leaving off deductions. And if you increasing your income on Schedule C so that you get an earned income credit, that was shown.
But you're not getting a benefit for the deduction
I understand, but it depends on how you allocate it.
It's just an interesting thing that,
It's an interesting thought.
It is.
Back to statutory language.
look, in theory, the most you could ever have in the future year, starting with 2019, of a taxable state refund is $10,000, because that's the highest state tax deduction, assuming you're a renter and you have, change that fact pattern to, I got 30,000 withholding, I'm a renter, so I have no real estate taxes, and I get a $12,000 state refund. 10,000 of it will be taxable, assuming I'm not in the AMT, which very few people are now going to be in the AMT with all the changes. Then I'll have I can't have more than a $10,000 taxable state refund. I only got a deduction at best for $10,000.
But this year's is 18.
It's 50,000.
So you had,
What's 18?
2008.
You may have had the
17.
17.
That has nothing to do with this law change. That's the old law. Your taxability on the 18 1040s that we're going to start cranking out is based on your 17 situation. I'm talking about next year, and thus doing an end around on not claiming a wasted state tax deduction to ensure that I end up with a non-taxable state refund come 2019 filing, reporting a 2018 state refund. That's the gist of this.
I'm more interested in seeing the worksheets on anybody who has a mortgage that they've refinanced over the years. To try to figure out how much of that mortgage is home equity.
So it's tracing.
Well, I think the software will tell you how much your 2019 state tax benefit is that you have to report as income. In somewhere.
It may when we start filing.
Just take a look at it and see what that's.
I'm sure the software's going to.
We'll see. Have a good filing season, everyone.
Thank
you. You got my message about, I emailed you before that.
Yeah, it's funny.